All right, Robert. So with the official coining of the term vulture spec, and you real estate chat viewers have seen it here first, like and subscribe to our channel so that you never miss an episode. We talk about bubbles now. And bubbles, as far as the real estate market is concerned, a lot of real estate commenters, speculators, viewers, everybody watching the real estate market, real estate lovers and real estate haters are expecting the bubble to pop. And we've seen, like, if you've read articles in the past, we've seen articles about the housing crash, the bubble popping, and it seems like these are cyclical, and it seems like they go through with business cycle. And so, in this episode of Real Estate Chat with Robert Heed,
And Jonder Perez.
we're going to take apart what the terminology of bubble means as far as it relates to business cycles, stock markets, businesses in general, and real estate. Robert, you shared this article with me from the Financial Post written by David Rosenberg talking about bubbles, recessions, bear markets, and it goes through like we'll share this in the description of all the previous or the a retelling of all the previous bubbles we've been through, the dot-com bubble, the financial market crash in 2008, and now gearing up towards the most recent bubble, which some are saying is driven by, the AI, artificial intelligence speculation, stocks like Nvidia shooting to record highs and valuation becoming so huge that it's surpassing many well-known companies that have been established for a very long time. But Robert, let's tie this into what it means for speculators and what drove real estate prices up to its peak. And are we seeing a bubble popping? The bubble popping.
Okay. We are seeing a balloon deflating. That in this article here, the best segment, I guess, a subheadline that they got in there is the real economy does not go through irrational exuberance, which was the characterization of the then Fed Chairman Greenspan when the market was going cuckoo. Investors do. And that's exactly right. That all of these Rosenberg, the permanent bear of the stock and bond market, is oftentimes has a comment on why things will go down. In this one, he talks about the bubbles that occurred in the late 90s when everything with a .com in its name, people bought in the stock market because they were sure it was a sure thing. It didn't matter what the relationship between the price you paid for it and the earnings that entity forecast. You just bought it because it was going up. And there was always a greater fool, also borrowed from them, greater fool who would buy it from you later at a higher price. And so you would make money. So irrational exuberance is exuberance that has no foundation in fundamentals. So this happens to every type of investment because it happens to investors in cycles. They go and they like this, and then that fails, and so they move on to the next one. That fails, and they move on to the next one, always hoping for the big hit. It's like prospecting for gold in an area that is well known to have patches and patches and patches and patches of gold if you can just find it. Now, the real estate market is one of the markets, as he points out here, that is being addressed by people promoting artificial intelligence. Now, artificial intelligence is just another computer that's predetermining based on what you've said to it over the last 15 days or 15 months, how you think. And now it's replacing you by doing automatically what you sort of might do if you were in that situation. There's a lot of people that think this is the future of all business. Now, do you like dealing with a bot when you're dealing with customer service? Or do you always say, give me a real person? You don't want the bot's answers because the bot can't think. The bot can't do anything. The bot can only react in a way that's similar to what somebody else did in the past that was approved to do. So, what's Dave saying here about the real estate business? Well, he doesn't know the real estate business. He's talking about the stock and bond business. It's been way up in the tech end based on AI, based on a couple of companies that are really doing big things that are selling a lot of chips. But that's a Korean, yeah, it's a Korean company and Taiwan company that's they're actually talking about. So things could happen that would disrupt that supply, and who knows what's going to happen. Now, we've talked a lot about the real estate bubble, that prices went from, let's say, 700 to 1.3 million in a time of low interest rates. Now, who drove those up? Was that all first-time buyers buying from the bottom? Was that all investors who were buying at the bottom? Was that all investors buying anything because anything that you bought and held on to for a year was worth more, and there was a greater fool who would buy it from you at a higher price in the future? Well, the greater fool theory always comes to an end. The rational, irrational exuberance that non-owner occupier buyers have with borrowed money that they're now investing at 0% because you got 2% inflation, 2% interest rates, it's free money. They make bad decisions about real estate. And then there's always someone willing to supply a fool with something that the fool wants. So builders were, high-rise apartments were, everybody was feeding this giant irrational exuberance. Now, it come to an end. Let's say it's come to an end now. If there's nobody buying with irrational exuberance, what's going to happen? That whole segment of the market that was driving it is absent. What's going to happen? It's going to calm down. If things calm down, what's going to happen? Well, if it calms down in every single aspect of Canadian society, then interest rates will come down because the people that are in charge of being in charge say, well, we can't have interest rates holding everything up. If that's the problem, let's drop interest rates. Even though they found out that dropping interest rates too far was a problem creator. So our friend Benjamin Tull said it best. The government and the Bank of Canada overshoots. They overshoot on the way up, they overshoot on the way along, and they overshoot on the way down. So we just have to live with it. What's going to happen to your condo that you bought for $650 that's now worth $550? Well, you decide whether you want to keep it or sell it because it might be worth $450. Well, it might be worth $650 in a year, but we don't know. If everything returns, if everything returns, if everything returns, but everything's not going to be returned. There's no going back to 2% mortgages.
Ever?
You can't have 2% mortgages. Mortgages are the rate of inflation plus 4%. That's what my mortgage is.
No, I mean it was a unique time, I guess. And what's really interesting about this,
So
Robert,
it's
is
if you look at the whole cycle, after 2008 is when the interest rates came down to the 0.25. It can't be. It cannot be. You cannot borrow. If you actually have money, it's cash, you worked and now you saved it, now you want to invest it. You can't have it in the bank at 0.25%. No, you can't. So you put it out in a safe investment, which is a mortgage. So you say, well, I'm going to lose some on tax, I'm going to lose some on inflation, so I got to get enough as a return clean on the money that I've already earned so that I can pay the tax on it and so that I can have, allow the inflation to eat a little bit of it. So that's why inflation plus 4% is what a first mortgage is.
well, the interesting thing about real estate is we first started talking about this, like housing crashes, bubble popping, recession, people losing their jobs. We first started talking about this when there were just hints of it, and it seems like everything is in slow motion when it comes to the real estate
Not
market.
with a bang, but with a whimper.
Exactly. So this is why, the balloon is deflating. It's not like a bubble popping because you're living through it. So real estate chat viewers, you are living through this. And so what we were talking about a year ago, and when you hear just the hints of unemployment or the hints of foreclosure and the hints of people losing property, it's starting to get amplified, but it's not like a big boom, like a big pop all of a sudden happened. And yet the occurrence over the next couple of weeks will dictate what we'll start to see over the next year or so. And so, Robert, real estate chat viewers who have properties, and hopefully you have a principal residence, maybe you have an investment or so. Like, is this doom and gloom into the foreseeable future? And if 2 episodes ago we talked about if we follow the 86 to 96 pattern, that means that we may continue dropping in price. What's the hope for anybody looking to get into real estate at this point? Should everybody just sell off their properties and leave Canada? I don't know. Like all these crazy things are being said out there.
There's no one market. It's just, as we've said 100 times before, one buyer with one set of circumstances of why they want to improve their life with the amount of money that they have available, and they're going to buy something because they've just really got frosted with someone who's their landlord, or really got frosted. They want to move neighborhoods because with their neighbor, and that person won't put up with the aggravation that they're currently experiencing if they can find something better. If they can't, then they will tolerate. So it's what is everybody doing? And it's also bad news is good news. So that if everybody else except for you lose your job, it's great because you can buy. You can buy like crazy. But if everybody's losing their job, then it's terrible. So you have to look at each individual situation. And most people are really doing this. They're saying, can I make a move? Can I sell this property and end up with more money than and in a more advantageous situation than I am now by doing nothing? Inertia, doing nothing, is the strongest force in nature because you're afraid of making a mistake. So you do nothing now. You do nothing until it's evident that there's something better to do. And so you wait for the bottom to be established and you wait for the thing to go up. So what happened in the early 90s? Houses were sold all the time, but someone would make a very cautious transition. If I can sell mine, I'll buy yours. What do you think? And someone will say, well, okay, we'll try it. It was a delayed time cycle, 90-day period to sell a property, 60-day property for the backup, 60-day time period for the backup. It's just a slower pace. Now, can we support 72,000 members of the Toronto Real Estate Board at that slower pace? Probably not. Can we support 100,000 across Canada? Probably not. So all these organizations that are trying to fit themselves for the future are basing that on the most optimistic scenario. When they find if that's not right, then they're going to have to organize. So where are we as individuals? As individuals, if you have a property to sell, you decide whether you're better off keeping it or selling it. It's probably going to fade in price by 10%, maybe 20% between now and 2 years from now. Well, everything is going to. So are you better off then or now? Your mortgage, if you have it on an amortization, is going to be reducing. Your mortgage, if you have it on a reverse mortgage, is going to be accelerating. So everybody has to decide based on a more comprehensive point of view. Now, they have wealth managers who don't charge you a percentage. A trusted bank manager. No, a bank manager is going to want you to borrow money from him, going to put in money in there. So try and find someone who can look at your situation, all of it, and give you some advice. And then you can decide. Sometimes it's very tough. Sometimes it's just uncomfortable. And sometimes it's tough to be uncomfortable, but sometimes you have to do it.
Right. So fasten up and stay for the ride, and we'll ride out another cycle. So thanks for watching this episode of Real Estate Chat. If you have any questions, type it into the comments and feel free to contact Robert and myself. We'll be happy to help you navigate through this. Thanks for watching. Take care. See you next time. Bye for now.
All is not lost.